Good morning out there. Just getting this show started. Hope everyone has had a good start to their week. Welcome to this week's episode of Back to the Futures with me, Markets and Mayhem. Today we're going to focus on live order flow analysis using Bookmap. We're going to look at stocks and futures, and of course, along the way, if you have any questions, charts you'd like me to look at, or otherwise, do let me know. Always happy to help. And of course, like with anything else, trading comes with risks. Don't risk more than you're willing to lose, and have a system that you could be consistent about in your trading. Don't just wing it. A lot of people get hurt doing that. Folks at Bookmap would love for you to join them on their Discord. They got a lot of great educational activities and events. You can do so by visiting discord.com/invite/bookmap or using the QR code on screen. A bit about me. Been trading for 20 years now. It's been a really interesting journey, one of both self-discovery and learning more about the world around me. When I first started trading, it was really a solitary journey. There wasn't the type of community support, there wasn't the type of educational resources or even tools that exist today. And so it was really just more trial and error. And so I really feel like a lot of the folks that are learning to trade these days are very fortunate because there's so many great resources. There's lots of mentors. There's lots of amazing tools out there. Obviously, like with anything else, there's a lot of noise. So you got to find what the signal is and what works for you and how you're wired. But I feel like we're in the era of retail trading in the sense that we've never had more advantages. We've never had more resources. And what we always have to remember is even if the big desks move the big money, we're not trying to compete with them. We don't need to sit there and try to call the bottom or the top. What we need to do is realize we're the little minnows swimming in the wake of those big whales and those big sharks, and we just need to capture that momentum. Repeat that move. Capture the spread of that inventory that we're buying and selling. That's all trading is. It's a business. You don't need to make it something that it's not, looking for instant retirement and wealth and riches. That's not going to happen. And folks that get in that mindset often hurt themselves because they're not impatient. Embrace the journey. That's one of the best parts about trading. Enjoy the journey of self-discovery, of learning more about markets and the world around you, and you'll find profitability comes to you over time if you put the work in. So why do I watch order flow? I tend to focus on different variables that I can use to qualify confluence in the markets, and that to me can be actionable. And we often see it when we look at, say, for example, a large level of interest in the options market, a large level of interest in the futures market, some degree of confluence between the two. Just as an example, finding that to be an important level and then watching how the flow may set us up to take us there. So order flow analysis and a lot of the tools for order flow analysis are really built around one key idea: deltas or differentials. Differentials in the bid and the ask, differentials in volume and aggression, differentials that you may witness over time, like with the bubbles on Bookmap, you're seeing delta of volume between buyers and sellers, or just delta over the duration of a session at a specific price when you're looking at something like the session volume profile. A lot of the order flow analysis comes down to that key concept. So keep that in the back of your mind. Another area that's really important is looking for large passive order flow or icebergs. Seeing these in the thousands on the ES contract, for example, can mark a turning point in the intraday trading tape. For example, if you have a nice big run higher, it starts to get a bit exhaustive. You see shorts starting to stop out. A lot of them are on the wrong side of it based on the session volume profile. Then you start to see icebergs coming in and selling in the thousands on ES. That's often a good place to take some off the table and look for a move lower. An exhaustive trading action where one party gets offsides. This is always fun. I've actually built an indicator to look for these types of events. And what it really means is there's one party that's just absolutely going bonkers. For example, if they're buyers, they're just sweeping the ask relentlessly to a point that stands out on the tape. And you get to a certain level of that becomes exhaustive, and that's where I mark it off. And in this tape, with the amount of volatility we've had, with the sort of illiquid environment that we're in, it's really important to find those exhaustion events because it can help to mark, like the icebergs as well, a turning point in the tape. For example, if buyers get really exhausted after a major move, you're more likely to see sideways to downward price action. And if it's a major exhaustion event, sometimes even a full-on reversal. So marking these types of order flow changes as they're happening can help us to navigate this trading environment. And this is all about intraday. If you're on a swing time frame, these types of indications may not be quite as valuable to you. So this is really focused on folks that are day trading, that are looking to pull out either scalp trades or even trend trades on a day-by-day basis. And it is a very difficult type of trading. About 95% of people fail at day trading in a year or less. A lot of that has to do with excessive risk-taking, not having a system, and just sort of treating it more like a gambling den. And I got to say, that's really not going to be the best approach, especially in a market like this, where one headline can absolutely change the narrative and the tail of the tape. So I really encourage folks to try to take a more systematic approach, qualify where some of these more actionable levels are. One of the ways I do that is I create both pivots and I map out the options positioning and flow in SPX as it influences ES. Both of those give me more clarity as to where I want to manage risk, what kind of price targets I'm shooting for on long and short trades, and also where the likelihood of that move is going to be on an opening range breakout extension, for example, or a trend day. So let's talk a little bit about some of the charts. NVIDIA holds this new trend line. We talked about this last Tuesday. I marked it off in the chart. This is a weekly chart. And we can see we've got a powerful bounce off that trend line, but we're still stuck in the Ichimoku cloud, and we still have prevailing negative momentum on that MACD histogram. So I don't think we're quite out of the woods on this chart. It still does look like a chart that's at this point consolidating after a big downward move. But I do like seeing that trend support there. And we did get down to that level I've been talking about, and a little lower, but I've been talking about 90 bucks or so. To see NVIDIA retrace down to there. I got a lot of flack on social media for saying that, and I get it. It's been such a rock star stock. It's really hard to say, I'm going to bet against this thing. But at the same time, you kind of had to, right? In this move where the narrative has been upended, you kind of had to at least take some profits in this thing because the AI story isn't quite what it used to be. Now, Apple also found some support, this time at its high volume node. That also ended up being a pretty cleanly defined demand zone. But the company is also in its Ichimoku cloud, showing that the stock is not in any decisive trend. It's consolidating its recent losses, and right now it's trading in a low volume node, so it could be a little spicy here. Next up, we have gold, and man, it is just going absolutely parabolic here. And a lot of what gold's trading on is uncertainty. That is the key catalyst for this precious metal. It's not so much a hedge against inflation, it's a uncertainty hedge. So when uncertainty starts to spike, you see folks piling into gold, and we've set really new all-time highs on a pretty regular basis. Last traded 32.18 on cash. So we're going to be wanting to watch gold. I do think it's getting a bit stretched here. I favor buying it back at that 21-week EMA. We can see that yellow line. It tends to honor it pretty well. When we pull back to it, we've seen it be rebid. So that's what I'd be looking for here is a pullback, a bit of a rebid, and then I'd be looking to potentially get back into some swings in gold itself. I still have plenty of swings on in silver and in gold miners. And I think that's where the opportunity of the path of least resistance being higher is a little more clear-cut than gold right now. I just feel like gold's getting a little bit lopsided. Doesn't mean it can't run. Sometimes it has its biggest runs when everyone's on the same side of the trade and they just get freaked out and they want to buy gold at any price. But that's where I get a little nervous because that type of price action doesn't tend to stand up too well over time. Now let's look at the S&P 500. It rejected cleanly at the 21-day exponential moving average yesterday. This has been a pretty key level. We could see it's rejected here. It's rejected in the past. It's also been an area that it's held. So we can see there's some value to watching the 21-day EMA as we're trading this market. It's been an area of resistance in this downward move. And the S&P, unlike NVIDIA, unlike Apple, unlike some of these other stocks, it's well below its cloud on the daily basis. Those other charts were weekly, so there is that. And this morning, we're implied to open around 5403. That's just down about 0.04% on the S&P 500, and we're about 20 minutes away from the market open here. Now, I think that this is a pretty interesting chart, so I'm just going to pop it out there on social too. Give me 1 second. All right, next chart we have here, SPX options levels, and we are looking at a pretty chunky area just around where we are implied to open on S&P. Got a decent amount of implied put support just below us and a wall of calls just above. So it's going to be interesting. We could get kind of mired in gamma, typically on options expiration week, and this is one of those. Monthly options expirations on Friday. The expiration is tomorrow. So we do have elevated flows, these passive SPX put decay flows in the AM and PM session that could help to pull the market a little bit higher, but we also have all this gamma kind of clenching us into a range. So my thought is without a larger catalyst, negative or positive, we're likely to be stuck in this range until next week. And then next week, we're likely to have price action that can be a bit more dynamic. But again, at any moment, a crazy headline can come out and change that entire narrative because we are in a new normal of unscheduled volatility catalysts. We can also see we are still relatively deep in negative gamma, but we are quite a bit away from where we are last week at this time. I think it was over 850 points. At this point, it's about 325 points into negative gamma. Not too thick, but still enough to catalyze that chase dynamic. What that means is that you have more probability of market makers chasing price. So if we're in a rip environment, they're chasing that rip higher. If they're in a dip environment, they're chasing that dip lower. And this matters because market makers are actually the biggest contributors to volume in the S&P 500 futures. S&P 500 options trade about 1.2 trillion notional every day. About 58% of that expires the same day. About 80% of it expires within a week. S&P 500 futures trade about 300 billion in notional a day. So you can see it's the tail really wagging the dog. If you're not watching the options, you're missing the bigger picture. It's like sitting in Plato's cave watching the shadows. So here is a quick update on the key SPX options levels, and we'll watch these throughout the day. We've got our call wall at 5905 SPX, and the parentheses levels are the ES levels for what it's worth. So that call wall is at 5942 ES. Gamma flip at 5732 SPX, 5769 ES. Put wall at 5200 SPX, 5237 ES. And vol trigger all the way down there at 5,000. That's a huge level on the chain, by the way. If you look at the S&P options, you can see it on my social media profile I posted earlier on Twitter. That vol trigger at 5,000 is the largest level of gross gamma positioning across the entire chain. So if we do end up fumbling back there, it could provide us some decent support, could also be a bit magnetic, get us a bit stuck there. But we're far away from that for now, so let's focus on the market in front of us. Speaking of which, here are today's pivots. And I'm also going to pop this out there on social so you all can see it if you don't get a chance to take a screenshot during the stream. ES is 5415.25. And NASDAQ is 8,058.25. And finally, we got some really cool deals going on. If you're interested in checking out Bookmap, bookmark this link for later, tradera.com/bookmap. Scroll down to the bottom. You'll see those special offers. You can get up to 40% off your initial term at Bookmap, which is a huge deal. You can also get up to 20% off tradera.com using the code Mayhem20 at checkout if you're interested in learning more about what we're doing. With all that out of the way, let's fire up Bookmap on screen here. We can see what's going on. We're just going to pull this in just a little bit. And we can see off today's lows, we got a decent little pop. It was really right there at that pivot level. We talked about that pivot on ES at 54.15.25. And we'll zoom out just a little more. Because we could see we had some interaction with that pivot earlier. So we can already tell that for this session, that's going to be a level to watch if we get more downside to see how that holds up as support. But overall, going into today's tape, I'm looking at this more constructively with the room for continuation higher. Now, I am going to want to watch that 20-minute opening range just to see if we're shaping up for any kind of trend day, what that range looks like. I also like to watch the flows in SPX during that first hour. It helps to shape the sort of sentiment, the narrative around the day from that prevailing options action. I think those two will be quite helpful. And then also watching how we interact with some of these key pivot and options levels. As we can see, we've got some of these key levels of call exposure just overhead that could provide a little resistance starting at key 1 plus. All right, got some questions here. I'm going to do my best to take care of all of y'all. Good morning, Big Deal Donuts. Nigeria Construction asks, how do I get started? Tell me a little bit more about what you're interested in getting started with here. Be happy to talk about whatever's on your mind. Ship says, hi, teacher. Would you mind explaining a little bit by what you mean exactly what pivots are? Yeah, sure. So pivots are basically lines in the sand that the market is drawn based on prevailing price action, where there's transactional activity. So I have an algorithm that I use to analyze that, and I've tuned it up to try to find these decision points, and I mark them off in two ways. There's regular intraday pivots and then major pivots. And the major pivots tend to be swing pivots. The intraday pivots tend to be more for day trading. But boy, the tape has been so wild lately that some of those major pivots have worked for day trading pretty well as well. But basically, they are derived from looking at the price action in the market over a specified period of time. And what I'm trying to do is show, rather than having to mark off with a chart or, however folks are doing it, automatically generate these actionable levels that you can use to manage risk, that you can use to manage expectations of reward as well. And they work pretty well because the market has muscle memory. It likes to come back to some of these decision zones and sort of relitigate where it is in its trend. So I find these pivots to be super helpful in combination with the SPX options visualizer. Kind of gives us a sense as to where the market thinks there's important levels, and then the flow gives us an idea as to how likely it is we might be getting to some of those levels. For example, if you see some confluence between the hot call and a big pivot level, and then there's also a resting offer overhead just near there, there's some degree of magnetism, especially if we're trending upward, making it more likely that we're going to pull to that level, especially if we see that hot call about 30% in excess of the hot put in terms of volume. So think of pivots as decision points where the market has to really decide whether or not it wants to, get to that pivot and break lower if it's a pivot below, or if it's going to reverse and start to move back higher. So if you're trading the market, looking at pivots as areas to, have a stop below or above, depending on whether that pivot's below or above and your side of the trade, can be an easy way to map out risk rather than spending, in some cases, people take a lot of time drawing lines on charts, tracking them over time. This does all that sort of work automatically. So let me know if that helps. So we're getting right back to key one here, pre-market. See a little bit of stop action. We're going to talk about what we're seeing on the heat map here in a second, too. And folks, you are welcome and encouraged to ask any questions you may have. That's what this is all about. All right, so on this heat map that we see on the screen, what you're seeing is liquidity on bid and on offer. This big red zone right here corresponds to the current order book. And the current order book is showing you where there's interest overhead and below in price. And that heat map will color itself more aggressively with that bid or offer liquidity closer to spot pricing. That is to say, 122 lots on offer is going to be more red here than if it's higher above us, just to kind of emphasize the potential impact it can have. So you can see that in the heat map. You can see that in the current order book. This is all the offers in the book. This is all the bids in the book. And then you can actually go in and use an add-on called outside liquidity, which I love to use, to give you the book depth at a glance. So right now, book depth on S&P is about 26,000. That's very light. We'll see what it's like when we get into the trading day, but this is a very, very light book. And that means that if we stay like this, it's more likely that it just takes a lot less volume to sweep all those offers or bids near the book. To really move price, it doesn't take nearly as much effort. That's a big deal. It means that if you're trading this thing, you really got to use smaller size. You're going to get wicked out on either side of your trade. You could be on the right side of the trade, but still get wicked out because of this prevailing illiquidity. So it means you got to consider widening your stops because you got to reduce your size to account for that heightened risk, right? That's the key to navigating a tape like this. Also, being much more careful with one's trades. I understand, wanting to get in there and participate and be part of the market. I know some folks who feel like they kind of have to constantly be doing that. But the reality is this is a time to be much more careful about execution on either side. Because you can have a ripper 5% up or down day on the ES or NQ pretty much at any moment. You could have a headline that comes out of nowhere, and you could have a candle that moves the market in 5 minutes by 5%. We've seen it. So don't get too cute is my point. Now, outside of the current order book and the heat map and the outside liquidity we talked about, we have these candlesticks, or if we look at the original kind of OG Bookmap chart, you've got these delta bubbles. Now, the delta bubbles are showing you the difference between buyer and seller aggression. The larger the bubble, the larger that particular side is participating in excess of the other side. So a big, big green bubble means buyers are getting real aggressive. Big, big red bubble, sellers are getting real aggressive there. You have the same on these delta volume candlesticks. So this is really handy because at a glance, you get to see which side is getting more aggressive on some of these moves that are happening. Like, for example, if you get a really big move higher, but there's not a lot of big chunky green bubbles in that move, that's telling you that move is happening without a lot of pushback from sellers. That it's really not a lot of activity happening to make that move possible. That can give you a little bit of a warning sign that it might not have the same kind of staying power as a more aggressive move would. And we also have the session volume profile here. You can think of this as mapping out deltas in the volume over the entire session. So where there's green, that means there was buyers in excess of sellers by that amount. Red, sellers in excess of buyers by that amount. This can help to tell you where folks are getting off sides. So if you think about it, if you were buying a bunch of S&P up here, and we start to move down, 20, 30 handles, you're more likely to puke up those positions in the form of a stop run or maybe even just getting out of them on your own. But in either case, watching that session volume profile can give you a sense where the aggregates of positioning are. Of course, we're looking at it somewhat naively. We're assuming that most of these are bought to open types of positions, or sold to open types of positions on the short side. Obviously, it can be buyers exiting and it can be sellers exiting as well that make some of these footprints. But for the most part, it works out looking at this somewhat naively, assuming that these positions are essentially opening positions and qualifying that as where parties may get offsides the more they get away from where they opened their positions. Then to the right of that, we have the SPX options visualizer that shows us where there are both flows and key levels. So we see yesterday's flows until today's flows start to come through. Yesterday, the hot call was the most active strike on the chain for SPX. It's around 54.50. We also had a lot of interest at 5,000, 5,500, I should say. And that was the Gamma 1 level. So that means that was the second largest area of gross gamma on the chain outside of that vol trigger we have at 5,000. That's why that was in my head. But yeah, this is a pretty handy tool to map out everything that's happening in SPX, where there's about 10,000 options on the chain, and seeing how that might be impacting ES during the day trade during even Globex, there's some influence by options. Obviously not active flow, but those positions tend to have interaction, particularly during the European session when market makers become more active again. Then below, we've got the subchart. This is showing us liquidity differential, icebergs, stops, and cumulative volume delta. And that can be helpful. All these can be helpful to just get a sense as to what's happening underneath the surface. It's a tale that goes beyond what just the price action is able to tell us. So, for example, right here, you see larger sellers lightening up a little bit on their positions as we get a little bit of a push higher, while we see some of these smaller desks getting stopped out, more of the momentum trading, smaller desks that are sensitive to small price moves, having some of these stop runs happen to them along this tape that's pushing us higher, closer to the point of control here. So that's kind of a breakdown of what you see on screen with Bookmap. If folks have any questions, let me know. So Ships asks, why do I use candlesticks instead of bubbles in the heat map? Well, personally, I tend to use the delta bubbles more, but I've noticed for people that are newer to Bookmap that they're more comfortable seeing the candlesticks. So I try to, since this session is really trying to help people that are newer and learning how Bookmap works, I start with the candlesticks. I try to put them in the filtered view just to help people understand what they're seeing on screen. But I do think the bubbles offer more value visually than the candlesticks do. So I've got another question coming in. Where do you usually watch flow for SPX? I watch it on my Discord. I built a bot called Gur that actually updates the flow every minute during the trading session. And it's in a channel called Flow. So I do most of my flow watching there. And then, I'm watching it to some degree in Bookmap as well through the visualizer. I've also got a chart of motive wave with my pivots levels. So I've kind of got a couple different places I'm able to watch it. And we're continuing to build out some of those options focused tools as well to add more ways of visualizing how options are impacting the market. Yeah, but to answer your question, I built my own visualization tool for that. And I'll give you a quick visual representation of what that looks like from yesterday's flow. Give me 1 second here. So I'm just taking that screenshot and I'm putting it on something that I can share it with you here. All right, so here's what that looks like. This is the regularly updated flow that happens minutely on the Discord. It also has the intraday GEX levels on one chart below this, but this is a visualization of volume showing it native SPX spot price, and then you've got the ES levels up top, just so you can see what it is on the front month S&P 500 futures contract. And then there's one chart below that also shows the gamma exposure levels. So got a little bit of everything to watch options. And it's not just SPX. We're able to watch pretty much anything that's optionable over CBOE. So got a lot of pretty cool tools for finding unusual flows, watching the current flows, how they're impacting the market, and so forth. And I feel like, if we're not watching options on S&P, if we're not watching on options on things like Nvidia or Tesla or some of the other leading stocks, if we're trading any of that stuff, we're doing ourselves a bit of a disservice because of how much influence they have. And this is a paradigm shift. It didn't always used to be this way. But pretty much from 2021 on, options really became the tail wagging the dog. So let me know if that helps. And folks, if you have any other questions for me, let me know. Market's about to open in 1 minute here. And I'm just going to pop open my market news here. That's what you saw pop on screen. Don't have a lot of event volatility catalysts today. Most of the stuff's out of the way from this morning. 8:30, we got import prices in New York Fed manufacturing. We got a 1 p.m. White House press briefing, then some executive orders at 2:30, and then Trump at the Navy trophy presentation at 3:30, and Fed's Cook speaking at 7:10 p.m. Eastern. So I would say all this sort of White House related stuff from 1 through presumably around 4 p.m. or so, that's going to be our key event volatility catalyst, the sort of unscheduled commentaries and any sorts of updates on trade policy or otherwise. That'll probably have a bigger impact on the tape. There's not any real macro events today. We do have some earnings after hours as well, but nothing too major. Markets are opening now, and we're getting a bit of a push higher. And again, we are above that 5415.25 pivot I mentioned earlier. Remaining above that has me looking at things pretty constructively overall. S&P trading 54.17, up about 0.2%. Let's take a look around the market, see what else is going on in some of these mega cap stocks. Apple opening a bit higher. Kind of a bit of a heavy order book, more on the sell side here by a delta of about 1.7 million. And noteworthy bid around 200 and 201. Amazon getting a bit of a sell off the open, also has a bit of a heavy order book, delta of offers by about 892,000. And pretty chunky bid around 179 and 178. Not nearly as much on the offer side near price. Got Broadcom on screen with a heavy order book as well. Delta of about 1 million to the sell side on this one. Big offer at 185. Decent sized bid at 175. And Alphabet had a bit of a bumpy pre-market session here, but trying to open up with some strength. And this one's order book's about balanced. So I'm liking the way this one looks overall. Kind of looks like a beach ball underwater versus some of the others. Then there's Meta. Meta also has a slightly heavy order book, but nothing like some of the others we saw with Apple, Amazon, and Broadcom. And you got a pretty chunky amount of liquidity down here at 525, 520, and 515 on the bid. Microsoft has a pretty heavy order book, delta about 823,000 to the sell side. And really, the biggest liquidity level I'm looking at on this book is around 395 with 27,425 on offer. Then there's MicroStrategy. I like to watch it because it's just a high beta shitco. It's a fun vehicle to watch. Look at all that liquidity up there, too. There is a lot of interest in higher prices on MicroStrategy. So we'll be watching that one, especially options flow and gamma levels on this, because I have a feeling there's some serious confluence here. And NVIDIA, wow, look at that. That is just an insane amount of liquidity overhead on NVIDIA. That's got to be the heaviest order book we've seen so far. Delta of 17 million, bid of 11 million, offer of 28 million, and super chunky offer at 120, over a million on offer in NVIDIA. And here's Tesla. Tesla looks pretty even, kind of like Google did. Maybe this will be another beach ball underwater type of stock. Big bid at 245, another big bid at 240 on Tesla. Offer is noteworthy at 255 and 258. But if you zoom out, you see a big offer at 260. And we're going to loop this back to the S&P futures. Got a question here from Jorge. Chief, what do you think about the bull SPAC? You know, I'll be completely honest with you. I have not looked at this. Oh, Webull. I see. I mean, they got a heck of a ticker, right? So that's pretty cool. And this thing is what? It's basically up sixfold from where it was at a SPAC. So maybe this is has the makings of being a SPAC that excites a lot of people. But right now, the historic PE, if this data is correct, is around 301. It's trading about 10 times book and about 10,000 times cash flow, if any of this is correct. Looking at FinViz here, it has me a little concerned. Seems like it's very rich. If we remember what some of these other IPOs did, like Newsmax, they had these insane moves higher, like just double, triple, etc., and then they gave it all back and then some. And the way this thing is valued, I would be kind of surprised if it doesn't have a similar outcome, but we'll see. I'd be cautious after this kind of a move on Webull. This thing also has no float. This thing is 9.73 million float. You can move this thing all over the map with not much money at all. Like, it pretty much, you could sweep the entire float for like, $60 million, which is crazy. Correction, 600 million. Still not a lot to sweep an entire company up. The market cap of this thing is 941 million as well. So it's a very small company. It's going to trade all over the map. For IPOs and SPACs and things like this, I like to give them about 3 months to really get a sense as to how they're trading, get maybe one earnings behind them, see how they're able to perform, because they have to be way more transparent once they're a publicly traded company than what they may have presented as a SPAC, even with some of the new guidance. So for now, for me, this is hands off. So Ships asked, so when you say it's on offer with those million offer at 120, what does that mean? The underlying wants to go towards that price? I keep getting confused about that. Yeah, that's a good question. So really what we're doing is we're thinking of the market as an auction. And we're seeing where participants in that auction have interest. And right now, the biggest level of interest near price on NVIDIA is 120. So what that tells you is if we start making a powerful move higher, particularly if you start seeing call sweeps targeting that 120 price in the NVIDIA options, makes it very likely you're going to get pulled into that level. But then the question becomes, how do we interact with that? That's a huge amount of shares at 120. So do we get pulled into it and buyers absorb all those shares and still have demand to keep pushing higher? Or do we get right up next to it like 119.95 and we reject lower kind of quickly because buyers don't have the demand to take us there? Or do we get into it, absorb that 1 million or 1.29 million, and then kind of go sideways for a while? Each one of those reactions gives us a sense as to how much demand is available. If we're able to push right through it and keep going, that tells you there's still room to keep moving higher because you just absorbed 1.29 million shares and they're still hungry. On the other side of it, if you get right up to it and reject, that's real bad because that's telling you buyers don't have the demand. Now, you might see that a couple times before the rejection becomes more pronounced. Like maybe you get up to 119.90, then back down to 118, then back up to 119.95, then back down, then eventually you pop back up. That can happen too as sort of you consolidate before you build a move to push higher. But then you can also have these sort of consolidation moves where you get up there, buyers absorb all that supply, and then you just chop sideways for a while because at that point, that was like, the sort of climax of all that activity. So what this is giving us a sense of is really where there's interest in price. It's not a directional indicator as much as a market on your chart. Here are some levels where we may see interesting interaction, right? So for right now, I would assume going into this that 120 is going to offer us maybe some resistance, but at the very least, some clues about the demand and supply situation on NVIDIA. Because obviously the order book isn't the complete story. There are plenty of market participants that aren't going to sit there with a big limit order at a big even number. There are some folks that are just going to go in via market. There are other folks that are going to participate via options, leaving the market makers to hedge that delta. There's all sorts of reasons to get flow. But I think this at least helps us to get a sense as to, A, this is a very supply-heavy book. So that means there's a lot more sellers than buyers on NVIDIA. Typically, unless we have some kind of catalyst, that can keep price kind of contained, right? Because you're seeing that sellers have almost 3 times as much on supply than buyers are offering on bid. So that kind of gives you a sense, if this is an auction, there's way too much supply out there. And that might be one reason also this thing's kind of chopping sideways. So to me, looking at the order book is much more of a demand and supply story than a magnet, we're going to absolutely go to this level story. It becomes more magnetic on certain conditions, right? So 120 to me would be more magnetic if we're trending higher. We see a lot of flow and options getting interested in that level in calls. And, then we start to see the aggression by buyers pick up because they're going to need that aggression to push to that level, which means bigger bubbles, right? That's the simplest way of visualizing that. So right now, I don't see any of those things. So right now, I don't have any reason to say NVIDIA is definitely going to 120 because there's that big offer up there. Instead, I look at it a little bit the other way. There's so much supply overhead, the burden of proof is really on the buyers right now. Let me know if that helps, Ships. Yeah, I mean, I've heard great things about Webull as a broker and all that. I haven't used them myself, but I've seen folks using them and they seem pretty happy about their execution and customer service. So that's cool. More power to them. If they're providing a good customer experience, I'm all about it. But yeah, I would just, if it was me and my money, I would sit on my hands for a minute and watch how it plays out because moves like that off IPO rarely last, especially when the valuation's getting absolutely insane. And insiders own about 35% of this thing. There's nothing stopping them from selling to add to that float. Also, can we check New and Melly? Those are real gems in my view. Yeah, we could check them out. Let's see what we got here. Let me just clean up my desk a little bit. Oh, Ships. Yeah, thank you, man. That's what it's all about. Ship says, you just clicked a switch for me with that explanation. Each week you answer some sort of question for me that really makes a difference in my training and understanding. Really great teacher. Well, that's very, very, very kind of you to say. Appreciate it. So my whole entrance to the world of trading online, the whole social media version of it, was really all about that, trying to share some of the knowledge I've been fortunate enough to accumulate. I've had some awesome mentors over the years. I started off pretty solitary, and then I met folks, in the financial industry as I was working more and more with them. I got to meet some great mentors and learned a lot of stuff, and that really helped me on my trading and investing journey to sort of fast track it, and so my whole goal is to try to do the same, pay that forward and help people learn and try to become more consistent and eventually reach success here. Biggest thing with trading is being patient with yourself. You can't expect immediate results. And honestly, if you get immediate results, you might be shooting yourself in the foot because there's nothing more dangerous than beginner's luck in this game. Then you might start to get a bit of an ego, then you might start to take on bigger positions, and then you might start to get yourself real hurt. So my whole, philosophy on this is be humble and always be willing to learn. We all pay a tuition to the market every time we take a losing trade. And that means we have the opportunity to learn the lessons being taught in that school of hard knocks that we call trading. And it's a beautiful thing because if we're able to learn from our losers and our winners, we can start to shape how we approach the market to really focus on building that consistency. And the biggest key is understanding why trades work and don't work. So journaling your trades and then dissecting that journal to understand more about what's working, why it's working, and what's not working, and why it's not working can help you to become more consistent as a trader. So here's NU. We're looking at this one on a daily chart. It's got a pretty cleanly defined downtrend here, so I'm not in love with the technicals on this one. Perhaps, if you're looking at gap theory here, maybe eventually you'll have this gap filled in by buyers. But the prevailing momentum on this one is just suggesting that it's still got some work to do. Even on a weekly chart, it looks like it's sort of just cracking, breaking down. So I'm not, just from a technical perspective, I'm not a huge fan of the way this chart looks. I think that we could easily get down to probably around this last consolidation zone, which is around $7 before all is said and done. So the company could be awesome and it could be a great long-term hold. None of what I'm saying here is to take away from that, but the near-term technicals look sketchy to me. Now we'll pull up new in Bookmap here as well. Give me a moment. And if y'all have symbol requests, let me know. I see Melly and Kweb next as well. Oh, Monzi, that's very kind of you. Monzi says Mayhem is the best. Very cool. Thank you, my friend. You rock as well. All right, so new has it's actually a pretty thick order book for a company this small. That's kind of cool. So it's reasonably liquid, is what that's telling you. Average volume about 56 million. I'm sorry, shares trading a day. So that's good to see that kind of liquidity. It's got a big float, 3.15 billion shares. Small short interest, forward PE of just under 14, PEG ratio of 0.7. I mean, the fundamentals on new look pretty good. So there is that. It's just the technicals have me a little bit concerned. Order book's a little heavy today, too. Excess of 236,000 shares on the sell side here for NU. So still more interest in selling this thing than buying it today. Biggest area of interest near price looks like about $9.75, 103,000 shares on bid for new. All right, let's take a look here at Melly. And this chart definitely looks less alarming to me than new. It's still got that downtrend look, but it doesn't have quite the slope of despair on the weekly chart. So we're on the daily chart here. We can see that downtrend a little bit more pronounced. We are starting to break back into the Ichimoku cloud. So from that point of momentum analysis, you could say we're neutralizing the downtrend because we're in the cloud on the daily. On the weekly, very similar look here, but it looks way more constructive to me on this weekly chart. This looks like a series of higher lows and higher highs overall. So I like Melly on this weekly chart. I feel like it's pretty constructive here, and it may have put in a interim low recently. Let's take a look at it in Bookmap now. So this is a super illiquid order book. It's probably because it's an ADR. So most of the trading is happening overseas. But I don't like the look of this order book because you really can't get too much value from it. There's, in total, 44,000 shares on offer and on bid. There is more demand, but again, thin order book, so I can't really deduce a lot from that. I would just say that overall, of the two, between new and Melly, I like Melly's chart a lot better. Let me know if that is helpful, Jorge. And John, I've got you on KWeb here. KWeb also has, it looks kind of like the Melly chart in the way it's constructive. It's violent on the weekly. These ups and downs, you got to hold on to your seat. But overall, it does look pretty constructive. Again, it has that look of, higher lows and higher highs, maybe with the exception of the most recent move. But overall, I think this thing came into a big chunky demand zone. It got a nice solid bid, so it still looks pretty constructive overall. And we also have more and more developments over in China, really about domestic stimulus. So UBS is downgrading their GDP, I think, to 3.4% to 2025. The Chinese government's goal is 5% ad infinitum, basically, for their GDP growth year over year. So it's really likely, given the trade war and all the other stuff we've seen, that the Chinese government actually starts to stimulate in some degree of size, because this is what they've been waiting for. If we listen to the commentary from the Chinese Communist Party, and I get it, like, it's hard to take these guys seriously because they lie all the time about all kinds of stuff, including their statistics that we've also been hearing for about 2.5 years they're going to stimulate, and we've been waiting. But I think we're turning the corner. And the reason I say that is because I think that the trade war and the negative impact on Chinese export is going to be enough that they're willing to really push size into trying to ring fence the risk into their real estate market and stimulate it, and also bring back domestic consumption by providing some plans to make it cheaper to borrow, to incentivize consumption. Because one of the long-term goals of the Chinese government that they've stated is making themselves more self-sufficient, more domestically oriented as an economy. And this is the perfect time to try to pivot to do that. And if they do, that should be pretty constructive to KWeb. So that's how it all kind of comes together there. Let's look at it in Bookmap as well. Jorge says, Chief, I also want to thank you. There's a lot of valuable info you share week in and week out. Well, thank you very much. That is extremely kind. Great feedback today. Appreciate you all. So KWeb's pretty liquid trader. You got over 1 million unit depth. We don't call them shares and ETFs. We call them units because it's a little bit different how they're engineered. But yeah, this is another one with a bit of a heavy order book. So, you still have more interest in selling, especially at some of these higher prices. You can see that up here in the COB or the current order book, 32.20, 33, decent amount of interest in selling up there. Some aggressive selling pressure in the session volume profile from higher levels as well. So sellers are on the right side of that. But, over the longer term, I think it looks pretty constructive overall. But one thing that does concern me a little bit about China is they did come out and basically tell institutions there not to sell shares to try to project strength at a time where global markets are volatile. And I always get a little concerned when you see all these different types of central planning. Wherever it's happening, whoever's doing it, it's always concerning to me because central planning tends to go poorly. I believe much more in free markets. I think that, free markets with some degree of regulation can function a lot better than centrally planned economies and markets. And the more central planning that's applied, the more dangerous and disconnected those markets and economies can become from reality. All right, let's get back to the S&P 500 futures here. Got about 8 minutes left on the session here, and we're going to take a look at the tape. We're continuing to climb here. This is a really nice move. So we talked about that pivot this morning, 5415.25, and above it was looking for more upside, and we're getting that upside here. We're making that push. And we could see there's some shorts getting stopped out here. Nothing too exhaustive. 362 contracts on that stop run. Another 220 contracts on this stop run that's happening now. And there's a little bit of passive selling overhead. But what do we have from buyers? We have the demand to keep pushing this thing higher. So you can see even with passive sellers checking out, there's still this push. And we haven't seen anything too alarming in that passive selling. Nothing where there's thousands of icebergs being sold into this push higher. Let's take a look at the interest. Wow, that's spicy. Look at those calls up there. Let's take a look at exactly what that portends to here. So we're looking at the hot call for ES. That's 55.57 even. And then the warm call coming in at 55.47 even. You can see them right up here. That is a lot more demand on the call side than the put side. The other side of the tape that we can see with the SPX options visualizer and on our Discord in the flow room is that the puts between the hot and warm put together, those are the two most active strikes on the SPX, less than 2,000. So the hot call is significantly outpacing that hot put. Now we're seeing some updates. Hot put coming up to about 2,000 on volume. Hot call coming up 3,000 on volume. Warm call 3,000 on volume. So between the hot call and warm call, 6,000. Between the hot put and warm put, 3,000. So again, twice as much volume in calls versus puts. It's very constructive. Going back to what we talked about earlier with options really being the tail that wags the dog, this can be very easily explained, this move higher with all the demand for higher strikes in SPX coming across. And this kind of suggests to me that we may get up to that, some of these levels that we've been exploring recently. We saw flow targeting SPX 5500 yesterday. Wouldn't be terribly surprising to see us achieve that outcome during today's tape with the kind of momentum we're taking on here. Again, we are at the mercy of one key caveat, and that is, do we get some crazy nonsense from this administration between 1 p.m. and 4 p.m. where all these activities with Trump in the White House come through? And I say that because that's been the biggest risk to upside moves and downside moves and trends in general, as we get some kind of headline and all of a sudden the entire narrative and the flow changes. So, Jorge, we're looking at all of the volume across every single strike on the S&P 500, and the vast majority of the calls that are trading at those levels are long. So really, when you look at SPX flow, the vast majority of it is buy to open. There is some sell to open going on, but you can look at the flow and the positioning without that clarification and still get a lot of value. I know there's folks out there that are purists that say, oh, you've got to have like X, Y, and Z, and you can only really know after the day is over and you look at the open interest, et cetera, et cetera. But really, you can infer based on premium changes, based on where volume is going, and based on what happens to the underlying, to get a better sense as to what that flow really means. And a lot of the calls up there, if you're looking at the value change, if you're looking at how premium is changing hands, those are bought to open calls in SPX. Many of them are set to expire today at close. And that Gamma 1 level we see up there, that is SPX 5500. So that's kind of our magnet to watch. Also have a pivot not too terribly far away here, just overhead at 54.8775. Right now we're testing a pivot that is 54.7525 and starting to build acceptance above it, giving us the idea we've got some room for continuation higher. Let's take a look at the NASDAQ here. Wow. It just keeps going. It looks even more constructive than the S&P overall. And it was a little weaker to start the day, so that's interesting to see that catch-up effect. You can see some of it in the heat map here too. I'm just going to pop this on screen for a moment just to show. This is the S&P 500 on screen. And we can see there is some of that interest building in tech and financials. You've got Palantir, for example, up 2.36% today. CrowdStrike up 1.88%. So you've got some interest building there. You've also got Netflix putting in a pretty nice jump there, up 3.35%. You got Bank of America up 4.62%. Wells Fargo up 2.41%. So that interest is building in some of the more high beta components of the market. Let's take a look at some of the majors here. Apple not to be left behind, really getting close to the day's high here. All right, I'm just going to take a brief pause to answer a question. Mark Q says, how do I get that information about options on my Bookmap? Where do you get your options information? Mark, that's a great question. I built a tool, and I'm just going to share it with you in the chat. So that tool is called the SPX Options Visualizer. And you can learn more about it by visiting traderaid.com/SPX. Sam Peter Xavier, that's traderaid.com/SPX to learn more about that tool. And that's how I do the visualizations. It's an algorithm that I built that scans the entire S&P 500 options chain. And it looks for where there is interest that stands out. So it maps out the top 6 positive and negative key levels, maps out the top 6 gamma levels if they qualify my parameters, and then it also maps out the 2 most active call strikes, the 2 most active put strikes, vol trigger, put wall, call wall, and gamma flip. So it's pretty handy. And it works for Bookmap, works for Motive Wave. and a number of different data providers. So if you'd like to learn more about it, visit that website. And if you or anyone else has any questions, feel free to shoot me an email. Very easy to remember, mayhem@traderaid.com. And everyone, I want to thank you all for tuning in. If you want to learn more about my work, visit traderaid.com. You can use the code Mayhem20 for 20% off your first billing period with TraderAid's Discord. We also have a number of trading tools, including the SPX options visualizer that you can access via the Discord or directly to plug into your Bookmap or MotiveWave. You can learn more by visiting traderaid.com/SPX. And if you'd like to pick up a copy of Bookmap, you can get up to 40% off. That's big 40. Nice deal. Visiting traderaid.com/bookmap, scroll down to the special offers. That's traderaid.com/bookmap. Scroll down to those special offers. And thank you so much, everyone, for tuning in for this week's episode of Back to the Futures with me, Markets and Mayhem. Wishing you all the best of luck out there trading these markets, and I'll catch you next week, Tuesday at 9 a.m. Eastern. See you then.